Hello everybody, welcome back to Alpha Action. Today we're going to be talking about an Apple loss recovery trade. So why put this trade on? Many people hold Apple as a core position as part of their portfolios for the long term. Half of American families own it. On top of that, I would say for longer term accounts, so not just a brokerage, a margin brokerage account, I would say for longer term accounts like Roth IRAs, traditional IRAs, 401ks, 403bs, any college savings account, anything, any of those sorts of things, longer term type accounts, for whatever reason, it could be a good or bad reason, who knows why, but for whatever reason, Apple just tends to be a very large core position in one's portfolio for these longer term accounts. So I usually don't see Apple as a big core position if you have like a normal margin brokerage account and you're swing trading on it, but for these longer term accounts like retirement accounts, for whatever reason, advisors and wealth managers and portfolio managers, etc., for whatever reason, they like to put on Apple as a long-term hold position. And I personally don't own Apple. I've never bought into the big dream of Apple being a larger company, of it growing. I just think it's overvalued right here. Sure, it's a high quality company, but I think it's overvalued. So I'm personally not a shareholder. So I'm personally not someone who would put on this trade. And I wouldn't recommend others initiate positions in Apple, even if they're bullish on the company long term. And again, I'm a swing trader, so my perspective doing trades that are 1 to 3 months are going to be different than a long-term investor's. But if you are a long-term investor who holds Apple and you face some losses recently, some unrealized losses, this is a way to recover on it. And on top of that, if you're a long-term Apple investor and you have some cash on the side and you want to initiate a new position, I will have a video coming up on that because there's a better way to play Apple bullish, that it has less standard deviation, thus there's less risk, less capital requirement, and still the same upside, and we can just consistently roll the spreads up. And so there's still the same upside, less capital requirements, less risk, and I'll make the video titled "Don't Buy Apple, Do This Instead." And so that video is going to be coming out, and that's basically going to be saying if you're a long-term Apple shareholder, that that it's a video for you, where instead of buying Apple, there's a better way to play it. And if you currently don't own Apple but you're still bullish on it, wait for that video. But if you do own Apple right now and you have paper losses, unrealized losses, and you want to recover them, there's a good way to do it. So front ratio spreads with 100 shares of Apple. So all options cover 100 shares of the underlying, so you would need to own 100 shares of Apple. And this front ratio spread will provide 2x leverage to the upside for no extra cost. And things to keep in mind here are that the downside is still the same. If Apple keeps on falling, you still lose the same amount of money. It's not like you lose more, but you still lose the same amount. And so you would still have losses if it kept on going down. But if it went up, you have 2x leverage. And this trade should cost nothing, or should be for a small credit. First thing you need to do, own 100 shares of Apple, but I'm assuming that if you're watching this video, if you're putting this trade on, you already do. And if you don't, as I said in the previous slide, you want to wait because I'm going to have a video coming out that shows a better way to play it with less capital, less risk, same upside. So if you already own 100 shares of Apple, you want to short two 275 calls, May 15th, 2020 expiration. On the same exact expiration, you want to take a long position in one 245 call. So this means that from 245 to 275, you are going to get 2x leverage because you already own 100 shares, and on top of that, you own a call, and you are going to cap the upside to 275. But here's how it's going to look. So if you look at this, I went to optionsprofitcalculator.com and I laid this out. And usually, if you own the stock, you have a profit and loss diagram that is just a diagonal line going at a 45-degree angle from the bottom left to the top right. And it's the other way around if you're short the stock, from the bottom right to the top left. But that is what your profits look like. Over here, though, I have done a position in which you're able to still have the same amount of upside, but then at 245 the upside starts to double, and it doubles until 275. Now you might ask, well, what if it gets to 275? Then I've limited my upside. Well, what we're going to do is that we're going to take that debit spread and we're just going to roll it up. And if you're not exactly sure how to do that, if it does get to 275, I will have a video coming out on that later. So for now, put this trade on. You get 2x leverage from 245 to 275, and then when it gets to 275, I'll have another video coming out where I show you how to roll the debit spread up and still keep the upside right there. And so just put the trade on, 2x upside. I don't even expect it to go above 275, but if it does, I will come out with a video showing you what to do in situations where if you have a front ratio spread on 100 shares and you did that to recover losses, so you would have 2x upside, but then you start limiting your upside to 275, what you should do then above 275 and how to make adjustments on the trade so you can keep your upside going. And until then, stay tuned.